Okay, ladies and gentlemen, this is a continuation of what I was saying earlier. So the last thing I said was this huge, massive reversal, which is a reversal hammer with the dragonfly doji, and this is where we are right now. So at this point, it looks very likely. And remember, forecasting is a game of probabilities. You assess the probabilities and you see where your risk reward is, and you move from there. Nobody ever knows what's going to happen tomorrow. You could be, you might not even wake up tomorrow. But the fact is that you have to go with your probabilities and your mathematical calculations of what you think is going on, or your life calculation of what you think is going on. So at this point, it looks likely that we're going to basically hit the 2101 mark. And over that, we are going to hit right here, which is the double top. You can see the reversal point, call it supply point or whatever you call it. And that's 2114 on the S&P 500. Once you hit 2114, we'll see what happens. We could come down. It's possible. That would be pretty dramatic. Or we break out and we basically get towards the highs. That's around 2133. Now, there's a seasonal factor involved here, which is extremely important for everyone to realize, which is options expiration week coming up. That's monthly options expiration. I repeat, monthly options expiration. Generally speaking, it has an upside bias, 80 to 90% of the time. And that is this week going into Friday. Wednesday, we have the the Fed minutes coming out, and it's very possible that the markets, after the initial volatility, goes higher. We are having a September Fed rate hike, in my opinion. Based on every assessment that I've made, it shows clearly that we are going to basically have a Fed rate hike, in September. So I don't think the Federal Reserve Bank and Janet Yellen is that phased about the China situation, because the Chinese have made it very clear they don't need to continue with this yuan devaluation situation. So given that, this 10-year bond index that you're seeing here is going to spike up, and that's probably going to get towards, and you can see that in the stochastics also. Let me just put it here. And this is the chart of the 10-year government bond deal. The way you read it, for novice traders and people who don't quite understand the markets, 21.96 really means 2.196%. Okay, so at this point, it looks like it wants to get towards and testing the downtrend line. And forget the downtrend line. Look at the 50-day moving average. That's 2.305%. All you have to do is move the decimal one step forward on the left. Okay, so that's 2.3% or 2.3% from the 2.196% that we closed at. So by the time all is said and done, we're going to be at 2.6%, and that's going to be by the latter part of this year, if not earlier. And I'm just looking at charts, and that's the way it is. Okay. Anytime we go, just simple rule of thumb, anytime it's not the movement, it's not the incremental increase in rates, okay? Remember, at the bottom last week, we were at 2.078%. Now we're at 2.19%, 96%. It's not the numbers. It's the way it accelerates or decelerates. When you decelerate like that, they start screaming, and this is where the clueless 8 predictive game, explanations come in. So please listen carefully. So when this type of stuff happens, where the 10-year government bond deal drops from 2.46% all the way down to 2.2% in a matter of days, they keep screaming, recession, it's over, the US economy is coming to a halt. It's nothing. It's all technicals. So at this point, we're going to have a reaction reflex rally bounce up to about 2.32%, and you're going to hear this. So I'm just letting you know early. From the media, they're going to say, oh, the US economy, is back on strength. And the economic numbers that are coming out this week will also show that. Housing starts are strong, and we're okay. So that's all that matters. Now let's take a look at the RUT, which is the Russell 2000, what I call the U.S. small cap infantry. Well, I'll tell you one thing. The U.S. small business growth is A-okay for now. They are not held hostage to multinational currency fluctuations because they're not selling that hard into the global markets. So you see this nice reversal that we made some decent money on, okay, on the 21st of May. This is a weekly chart. And then we pulled back a little bit right there. And now we're up on the way up. Once we enter this channel up here at 1217, it is technical momentum that carries us to the 34-day moving average, that's 1240. And then the downtrend channel right here, this channel that I kept on showing, which is at 1250. So we have a decent sum of money to make. Every 10-point move on the Russell 2000 calls in the money or 5 points out of the money is roughly 100% return on your return on investment. Just the way it works. I didn't make it up. All right. So at this point, if you just looked at this chart, you knew nothing about all this mumbo jumbo about foreign multinational currency movements, this is what you would be looking at. All right. So the RUT calls are a damn good bet at this point. Let's take a look at the QQQ, which is the NASDAQ 100, which includes Apple and Netflix and all those power movers. So daily chart, again, the same story. We're moving sideways, but positive. Okay, sideways, but positive. So at this point, massive hammer reversal. You can see that. And now we're here. Upper end of the Darvis, that's what I'm shooting for, is 112. That's a decent sum of money again. I can draw the downtrend line. The downtrend line crosses at 112.19. Now, all this happens if the Netflixes and the Apples and all that stuff, start moving. And put this in red. That's a major downtrend line. If we do cross the downtrend line, then all bets are off. We're going to go crazy. So whichever the case, use these as markers. And when I keep on showing these charts, I hope you understand what I'm talking about. Is it magic that all these channels just kind of fall into place? No, that's technical analysis. That's the way it is. We are going to the top upper end of the channel, in my opinion. All right, so enough of this, and let's go back to good old TradingView. TradingView is very clear. We want to go higher. We want to go to 1115, and that's where we are. That's what the move is. I'm going to finish off this little video cast by showing a quick chart of Apple because that really controls the market. And let's not, fool around here. So we're in this upward channel here. This is also kind of a bear flag, so I'm not fully convinced yet because this could really destroy the market on a short-term basis. So if we hold this and we look at the upper end of the channel, then we're looking at about 119, 120, which also happens to be this major resistance level here and the breakdown level right here. All right. Now, why is this important to the rest of your trades? Because Apple controls the market in a way, okay? And just the size of it, it's weighting in the Dow Jones Industrial Average, it's weighting in the NASDAQ 100, just the way it is. So what we don't want to see is Apple basically break this downtrend line and then head towards 113.81, because once it breaks this, we're back to 108, which would be a great buying opportunity, mind you. And we did buy that. Okay, we did buy that. So all our track records are out there. So guys, ladies and gentlemen, I'm going to sign off right now. We have two little short video casts. Listen to it. I'm not going to make any comments or anything. Just put the video cast up there and we'll go from there. Have a great evening. I'll engage with you guys tomorrow morning. And God bless America. Best house in a bad neighborhood. We are still going to be the best. And there's no question about it. And my name is not Donald Trump. Just kidding. Good night.